Imagine walking into a coffee shop that looks just like Starbucks, sells coffee almost as fast as a smartphone app can process orders, and suddenly becomes one of the fastest-growing companies in the world. That was the story of Luckin Coffee in China. In just a short time, this company promised to challenge Starbucks and even become the future of coffee in China. Investors were excited, customers were curious, and the company's growth looked almost unbelievable. But later, the world discovered that something about this success was not real. Luckin Coffee was founded in 2017 in China. The company had a very simple idea: sell coffee quickly, cheaply, and digitally. Instead of large cafes where people sit for hours, Luckin focused on small pickup stores and online ordering through a mobile app. Customers could order coffee with just a few taps on their phone and pick it up within minutes. The prices were also lower than Starbucks, which made it very attractive to young consumers. Because of this strategy, Luckin Coffee expanded at an incredible speed. Within just 2 years, the company opened thousands of stores across China. Many people started calling it the Starbucks killer. Investors around the world were impressed by this rapid growth. In 2019, Luckin Coffee went public on the Nasdaq stock exchange in the United States. The company raised hundreds of millions of dollars, and its valuation quickly reached billions. At that moment, Luckin Coffee looked like a perfect success story: technology, fast expansion, strong marketing, and huge investor interest. But behind this impressive growth, a serious problem was quietly building. In early 2020, a shocking report appeared from short seller research groups. They claimed that Luckin Coffee had been exaggerating its sales numbers. According to their investigation, many of the company's reported transactions might not actually exist. The report suggested that Luckin Coffee was inflating revenue to make the company look more successful than it really was. At first, Luckin Coffee denied these accusations, but the situation quickly became worse. Internal investigations later revealed that the company had indeed fabricated a large portion of its sales data. In fact, more than $300 million in sales had been completely made up. This revelation shocked investors across the world. The company that once promised to compete with Starbucks had built its reputation on fake numbers. As soon as the news became public, Luckin Coffee's stock price collapsed. Investors lost billions of dollars in market value almost overnight. The scandal also raised serious questions about corporate governance and financial transparency. How could a company listed on a major U.S. stock exchange manipulate its numbers for so long without being caught? Regulators began investigating the company, and the scandal quickly became one of the biggest financial fraud stories in recent years. Eventually, Luckin Coffee admitted to the fraud. Several executives were removed from their positions, including the CEO and other top managers. The company was heavily fined, and in 2020, Luckin Coffee was officially delisted from the Nasdaq stock exchange. For many investors, the damage had already been done. People who trusted the company's growth story had lost huge amounts of money. The scandal also damaged confidence in Chinese companies listed overseas. But the story did not completely end there. Surprisingly, Luckin Coffee did not disappear. After restructuring its management and trying to rebuild trust, the company continued operating in China. Many of its stores remained open, and customers kept buying coffee. Today, the Luckin Coffee scandal is often used as an example of how rapid growth and investor excitement can sometimes hide serious problems inside a company. It reminds us that impressive numbers and fast expansion do not always mean a business is truly successful. In the world of business and finance, transparency and honesty are just as important as innovation and growth, and the rise and fall of Luckin Coffee shows how quickly a billion-dollar success story can turn into a global scandal when the truth finally comes out.